I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, president of InsideTrack.com. Welcome back to the show, Eric.
Thanks for having me back, Jim. Good to be here.
Oil prices up as we speak because OPEC says we might freeze production. Russia has said they're in favor of doing that, perhaps when they meet on the 30th. And just that chat, for the last 6 months, it seems to me, they've mentioned, we might freeze oil production, and every time the price goes up. Will they ever freeze production? Will they just continue to talk about it?
Well, I'm sure at some point it's going to happen either by default or by a intentional movement on their own, but it's a little disingenuous when you listen to someone like Russia coming out and talking where they've waited till they've hit just astronomically high levels of production, each month exceeding the previous and probably nearing capacity. Then they want to come out and talk like they're really a team player here. Okay, let's freeze production here. We've maxed about as much as we can squeeze out of our production, so now let's all agree to freeze production. Well, if production at current levels has gotten you to $40-45 a barrel, then freezing production, other than a little emotional bump, isn't really going to do much to the price.
And of course, you have so many countries asking for exemptions from that, citing special circumstances. Iraq wants to be excluded. Iran says they won't play along. Venezuela is desperate for every penny they can find. They don't want to go along with a production freeze. Would this thing fall apart the day after they talk about it?
I would imagine it would. Like you said, Iran has made it clear they're just back online in the last year, so they're actually ramping up. So even if there was a freeze that everyone else adhered to, Iran could continue to boost the global production levels for many months. I'm not sure how long it would take them to ramp up to full capacity, but it's really going to be a moot point, and I think that, we talked about this early this year, and that even from just a cycle standpoint, everything was fulfilling what my work had said back in 2014, 2015, that we'd see crashing oil and crashing Canadian dollar and Russian ruble along with it into early 2016. And I know you asked me a couple times if that meant, we were starting a bull market, and I still echo what I said then, that I thought it would be at least 1 to 2 years of a bottoming process before you would be able to see any sustained move to the upside. And it's closing in on a year now from the low, and we really haven't gained much ground. We've just kind of set a floor under prices and then vacillated a little bit above that floor. I'm still looking for a secondary low on a 1 to 2 year basis in early 2017, so it wouldn't surprise me to see the current range kind of drag out for a couple more months and then have something trigger just a little additional spike low that in theory it should take out any of the lows of the last several months, but most likely be set above the low of early 2016.
Despite all this talk, does it look like oil is going to stay in the $45 to $50 range?
Yeah. I mean, and I'm sure there'll be times when it spikes above that range and times when it spikes below it, maybe even for a couple of weeks. But all in all, when if you pull up a weekly chart or a monthly chart, I would imagine you're still going to see the majority of the range in that $40 to $50 a barrel for still some time to come.
Did Saudi Arabia shoot themselves in the foot when they decided they would try to take out the U.S. oil frackers?
I think that they've got a kind of a long-term view of it, and I think that they are not naive in thinking that it would eliminate that competition in 6 months or a year. They made it clear, even as prices were starting to plummet and everyone was looking to them to step in and at least make some sort of intonation about coming in and dropping production a little bit. They made it clear that they could handle oil at much lower prices and sit there for a while. They've tried to diversify their economy, although they definitely are hitting kind of getting close to crisis level where their economy and their income is concerned. But I think that from their perspective, they probably knew it would take a while, and they got to see if it's going to bankrupt any of the fracking industry, and then from a longer term perspective, they're back to king of the hill. But I think that there's so much that continues to evolve and develop during this time frame that there's always the unintended consequences. There's always the surprise effects that you never anticipated. That in the long run, I think that is going to hurt Saudi Arabia. And it, even though things have been relatively calm in the Middle East for the last year or so, there's always that potential, if things get any closer to a crisis level, that you start to get civil uprisings and who knows where that would end up leading.
Right, and of course, when the social welfare taps dry up in Saudi Arabia, that's the biggest fear. There'll be an uprising. People don't really like living under a dictatorship.
Right, and in the past, like even during the Arab Spring, you saw Saudi Arabia kind of use finances and money to try and nip that in the bud in their country. That they started to see a little bit of the uprising and then started spreading the wealth around a little bit, and that seemed to placate enough of the citizens that they weren't hit the way many of the other countries were. Well, you can only do that so much too. And if they've really dried up some of their resources, who's to say how much there would be to spread around the next time that something like that develops?
Well, one of the problems too is all these guest workers have been laid off and they have no money to get home.
Right.
We'll have more with Eric Hadik right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Eric Hadik. Eric, how much of the oil play is related to the U.S. dollar and its surprising continuing rise?
Well, I think that's a big factor, and a factor that many of these oil producers have been underestimating. And, to kind of look at the outlook there, I have to step back a few steps and just reiterate what these longer term cycles that I have been discussing for the last 5 to 10 years. And the simple synopsis of my 5 to 10 year outlook several years ago was that 2013 to 2017 would be a major transition phase for the U.S. dollar, where you would actually see a kind of a competing events where I thought that there would be fundamental events occurring that would start to chip away at the dollar's standing, but that while that was happening, not many people would notice it because I was anticipating the dollar to increase in value from 2013 into 2017, and that remains the case. I've been discussing a period of time in 2017 that is the convergence of a lot of long-term cycles, some of them multi-decade and multi-generational cycles, also multi-year and multi-month cycles. It's even been kind of honing down to multi-week cycles that are all coming into play in the same time frame, and for me, that's the highest probability for a final dollar peak. So I think that we still have some more upside in the dollar. Back in October, I talked about how the dollar was ready for a new surge and that was going to be what drove gold and silver down into mid-November. And all of that has continued to play out, and I think that the dollar is going to continue to remain strong into probably into close to mid-2017. And that will certainly keep a ceiling, or at least a primary negative factor looming over the price of oil. And I think that that's going to continue to suppress any of these rebounds that we see in crude, and probably push some of those nations a little closer to desperation.
There's no way for them to just go out and cut prices now, too. They found out that you have to have a minimum value to just maintain yourself, let alone make any profit.
Right.
With the U.S. dollar expected to continue to rise, what about other currencies? Are they going to fall in relation to it? Of course, that's how currencies work, I guess.
It is, but there are often kind of anomalies that you have to be very careful of, and one of the axioms that I constantly stress and warn my readers about the most is dealing with market-to-market correlations, and you can't sit and just expect a one-to-one either inverse correlation like you're referring to with the dollar and other currencies, or a correlation that's in lockstep with something like the dollar. And so, there have been times when the euro becomes the focus, and the euro is plummeting, and so you see the dollar rallying, as you would expect, but you also see the yen rebounding. So you've got, you look at the charts and you see the dollar and the yen rising, and I get readers saying, well, that's impossible because the yen, you're talking about the yen priced in dollars, and so it has to go in opposite directions, and that's not always the case. Same thing with gold and silver. Even just this weekend, I got another inquiry from one of my subscribers, and I probably not a month goes by that I don't readdress this topic. But even with like gold and the dollar, the major turning points are very rarely at the same time. And one of the perfect illustrations of that I point out is just look at the dollar and gold from 2008 to 2011. And the dollar set its bottom in 2008. So in theory, that would mean that's gold's highest point if it's a gold versus dollar inverse relationship. And yet, gold had its biggest surge from 2008 to 2011, and more than doubled in price, and yet the dollar just kind of played around near its lows, never set new lows. So gold set its peak more than 3 years after the dollar's low. So that whole argument about it having to be a one-to-one inverse correlation was just kind of blown to bits, and that continues to play out. Even when I was talking about my gold analysis for the second half of 2016, and that we would see a sharp decline from July into mid-November, but that it would see gold and silver bottom out above where they bottomed out in December of last year, even though I expected the dollar to be rallying to new highs. And so I get these questions of, well, how can that happen? You know, if the dollar's going to new highs, that means gold and silver should go to new lows. No, it doesn't, because each of them also there's that correlative factor, but there's a lot of other factors that are more individual and isolated to each entity. And so, you know, kind of going on a little bit of a tangent here, but it's just that idea that you can't assume that because one's going one direction to a certain degree, that the opposite is going to go to the opposite direction to the same degree. So all that to say is, with the dollar heading higher, you could see certain currencies really plummet during that time, and other currencies just kind of mark time and be trading in a trading range more or less sideways, waiting for the dollar to put in its final peak.
The price of copper has skyrocketed over the last couple of months. I remember when it was roughly around $2, and now it's at $2.52. What explains the rapid rise in the price of copper?
Well, there were certainly some fundamental factors and factors that were more individual to copper, like I was just referring to. But to me, that just reaffirms what I've been talking about with this longer-term viewpoint. And when I started to talk about the dollar in 2013 to 2017, the next phase of that outlook, the ensuing segment of my 5 to 10 year outlook, has been that 2017 to 2021 would be just the opposite, where the dollar would begin to turn lower, but even as its downturn might not be all at once, but I did think that 2017 was when inflationary commodity moves were going to be seen in a lot of markets, and copper is often the one that leads the way. It kind of it's that canary in the coal mine, or the forerunner of some of the others, and it has had a structure of a developing bull market since early this year. And in my Inside Track newsletter in August and September, I was discussing how we were getting set for a secondary bottom, and that copper should begin to lead the way, even as gold and silver were expected to still see some more downside. So there's this often this lag and or lead effect where certain markets will have big moves that appear to be completely contrary to correlated markets, but all it is that the timing is offset a bit, and that copper right now is reinforcing what I'm expecting in a lot of markets over the next 1 to 2 years. And many of your food and grain markets, I think, are going to see similar events in the next 1 to 2 years. And I've talked about food crisis cycles that just really appear to be coming to a head in the next year or two, and that I think we could see surging prices in many of your food commodities. So copper is definitely a validating factor to that overall outlook, and I think copper is going to see some consolidation now that it saw such a rapid move up. It even spiked, I think, above 270. But that is just reinforcing that it has put in a major bottom, and it is in the developing stages of a bull market. So ultimately, it wouldn't surprise me to see another big move up in copper, but I think that's a little bit down the road.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim, and have a great Thanksgiving.
My guest has been Eric Hadik, president of InsideTrack.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.